After a week of vacation, I'm back and we are here in the weekly summary. Quick reminder that everything you're going to see here is not financial advice. It's just me sharing with you for your education and entertainment all the news that happened this week. And let's directly dive in even without the intro. This is our YouTube page where you can subscribe. We have over 4,000 subscribers. So if you enjoy this content, I would love that you would join. Here we go. S&P. You know what? NASDAQ. Up for the week 5.3%. S&P up 3.9%. Russell up 2.97%. Dow Jones up 2.9%. And the RSP, which is the equal weighted S&P 500, up 2.4%. This was the best week of the year. Brought us back to November 2023. And this week proved to everyone, or actually the last 2 weeks proved to anyone, that if you miss the best 5 days of the year, you are losing, or you're going to lose the gains, the maximum gains possible on the S&P 500. And that is why, if you're not a trader by nature, if you don't know how to utilize these capabilities, don't even try. Just stay invested. And yes, this is how this week looked like. It's phenomenal what happened in the market after Red Monday, which actually I didn't summarize here on the English channel. So you know what? Let's go back and give you a quick summary of what happened. Last Monday, not August 12th, August 5th, the market opened up with the unwinding of a Japanese trade. The Japanese trade was a huge trade where borrowing money from Japan at a 0% rate and buying treasuries, which gave 4 or 5% in the US market, or even buying tech stocks, which provided higher gains, borrowing for zero, basically free money, and investing in high growth stocks. Stocks like Nvidia, stocks like Apple and Microsoft and others. Now, this was amazing for the Japanese traders. Then came Bank of Japan between Wednesday and Thursday, that's almost 2 weeks ago, and decided to raise the rates from 0 to 0.25 with a strategy to keep raising rates. This created the perfect storm for the Japanese investors. And when I'm saying Japanese investors, I'm talking about the big Japanese investors, the pension funds, the insurances, all the big companies. Now they have a problem. The problem consists of two parts which are one on top of the other. One, interest rate is going up, so the free money is not free anymore. Now you need to return it back to Japan, and you need to pay the interest. That's one. Two, the Japanese yen versus the dollar. That also impacted the raising rates, which created a situation where they needed to unwind very fast their investment in the US stocks and bring back the money to Japan. Otherwise, they would have been in a situation where their investment might have gained, but because of the high interest rate and the difference between the Japanese yen and the US dollars, they would actually maybe be even in a loss. A loss would create a margin call. Why? Because they loaned a lot of money. Against what? Against their stocks. So they need to sell the stocks. Which ones? The highest gainers. Nvidias of the world, Apples of the world, Microsoft of the world. What that created is the unwinding of the Japanese trade. That unwinding of the Japanese trade created the turmoil that we saw. And that turmoil, you know where that ended, right? Excellent. That brought us 2 weeks later to this position where we got a 4% week. Maybe I even summarized it. Did I? Red week, Buffett selling? No, I didn't summarize it. So now you got the summary. Never mind. Now you know what happened in the unwinding of the Japanese trade. By the way, if I didn't summarize it, I will add one more thing. And if I did, you just heard it twice. It's fine. It's okay hearing things twice, especially when they're that important. There is this amazing chart, and you can see it in different ways. This is from First Trust. There's another one from Result Capital. There's one. It doesn't matter. The idea is the following. This is the chart of the S&P 500. What happened if you would invest $10,000 in 1970? how much money you would have today. I'll give you the bottom line. If you would invest $10,000, 1970, in the S&P 500, or let's say 74 here when I was born, yes, I celebrated 50 this week, I would have $2.6 million if my parents did this instead of buying me hair products. But what all these lines present are reasons to sell. Last Monday was a reason to sell. Why? Unwinding of the Japanese trade, market is crashing, blah, blah, blah. But remember, every time there was a reason to sell, there are hundreds of times of reasons to buy. And that is why staying in the market and investing and not being afraid of these crises is always a good strategy. And again, this is not financial advice, because maybe there will be once a crash that we will never come back from. But that means that the market is done. And we can't predict that because we're in the market. And these are the indices themselves. You can see the technology up 7.6%. XLY consumer discretionary up 5%. Thanks to Walmart and Tesla. Financials up 3.2%. Crypto market, not a huge week. Bitcoin up a fraction of 1%, not something dramatic. Gold, all-time high. Silver, trying to beat that as well. Very strong on the commodity side. Crude oil, not something dramatic, minus 0.2. And natural gas down 1.7%. Magnificent 7, amazing 7, whatever you would call them. Nvidia up, I looked at it earlier, up 37.8% in the last 2 weeks. 37.8%. When the VIX shoots up, you need to close your nose, close your eyes, and buy. Why? Because you want these gains. 18% just this week. Tesla up 8% for the week. Amazon up. You can see all the information in front of you. And that, of course, brings us to this week's news. And we'll start with the reports, the macro reports that came in and soothed the pressure from the different investors. PPI, Producer Price Index, came lower than expected. That, of course, gained the confidence that inflation has broken and the Fed will lower rates. Then came CPI a day later, also lower than expected, which again reassured investors that the rates are coming down. And to top things off, July retail sales also came in strong, meaning that the consumer is strong, inflation has broken, the Fed can start lowering rates without being afraid to break something. So the soft landing, the avoidance of recession is back in play. Will we avoid recession? Hopefully we will. You can never know until you've met recession. Other things that happened this week, hedge funds and big investment firms needed to provide their reporting for the quarter. Main things that we saw there, Michael Berry betting on China, Warren Buffett opening an Alta position. All this is relevant to the end of last quarter, by the way. And some of the big hedge funds reducing their exposure to NVIDIA. They might have gained that or bought that back. We don't know. Remember that it ends in June, end of June. So we're not sure what they did from that point, but that might have increased. That might have created that drop we saw in the S&P up until 2 weeks ago. Starbucks, with the activist Elliott management being very involved, and the result, Tuesday morning, if I'm not mistaken, or Wednesday morning, Starbucks CEO is ousted, and they're bringing Brian Niccol from Chipotle to be the new Starbucks CEO. That, of course, shot up the stock, Starbucks stocks, by 15%, and Starbucks ended the week being one of the most overbought stock in the market. And Chipotle, on the other hand, fell from that news. AMD finished their acquisition of Silo AI, the largest private AI lab in Europe. Micron CFO keeps saying that the demand in data centers is still robust and huge. American investors are taking all their bets off of China. Right now, or hedge funds actually, are pulling record funds from there. Bitcoin miner Mara has acquired $246, if I'm not mistaken, $1 million of Bitcoin. Boeing is doing what only Boeing can do, keeps discovering new set of problems, even with the new CEO. And actually, I believe the new CEO will find a lot of problems at the beginning to clean the slate and then start from scratch. That will be the easiest thing for him. NBC, or actually their parent company Comcast, CMCSA is the ticker, saw amazing primetime coverage, an average of 30.6 million viewers, up 82% from the summer games. They had an amazing coverage as someone that watched it. Great coverage, great Olympics. It was a fun Olympics, actually. And DOJ is thinking of breaking up Google. Is that possible even to break up a company that everything is intertwined with one another? We don't really know, but they're looking into it, breaking up Google after they lost their monopoly case on search. Mars is buying Kellanova. And if you don't know what Kellanova produces, they produce or actually market Pringles, Cheez-It, I think Pop-Tarts as well, but I'm not sure. So, expanding their reach into everything we buy at 7-Eleven. And this is Eric Schmidt, who was the CEO of Google, came talking with Stanford students and actually providing a lot of rant on how Google is being managed at the current situation, with remote work being so dominant and all the luxury and fun. He says that when there's so much fun, people are not focusing on winning, and that's why Google is behind. Bostic and other Fed members came out this week and saying, we understand we need to lower the rates in September. That's, again, fueling the market rally. And Walmart. An amazing week for Walmart. They provided their quarterly results, beating on top and bottom line, providing a lot of reassurance on the consumer, raising their forecast. But the most important thing was, or actually the two most important things were, one, the consumer is strong. Consumer hasn't broken. Two, they're using generative AI in a dramatic way. 850 million pieces of data they have in their catalog. They say, both the CEO and the CFO, if we needed people to do that, we would need to increase our current headcount by 100x to complete it at the same time. Meaning that they are, I think, the first big company outside the hyperscalers, the Magnificent Seven, which came out and said AI not only is proving itself, it's increasing our top and bottom line. That again fueled, of course, the rally in the chip sector, whether it's Nvidia and other companies as well. And because the consumer is strong, the same day cruise lines went up, apparel went up, retail went up. Why? Because the consumer is strong. So if it's strong across the board. Morgan Stanley believes that the end of the year S&P might reach 6,000. That's another almost 10% from here. While Piper Sandler believes that we might get to 5,000 in the coming weeks. Now, if you combine them two into one, let's call it prediction, going down to 5,000, that's a big drop. It's almost 10% from here. But going up from 5,000 to 6,000, that's 25%, right? 1 out of 5, 20%. So, sorry. From 55 to 5,000 is 10%, and then going up 20%. I don't know. There's also monkeypox around, apparently, and the WHO, the World Health Organization, is declaring it a health emergency. Just beware of monkeys. And monkeys. It's something serious. And ARM is developing a gaming GPU to compete with Nvidia and Intel. I believe it's mainly against Intel. And last but not least, they were supposed to launch a new streaming service from Fox, Disney, and Warner focused on sports. Fubo is trying to prevent it, and they won their case in the trial. That, of course, brings us to next week. These are the companies reporting. We'll mainly focus on Palo Alto, Lowe's, Toll Brothers, Target, Macy's, TJX, Snowflake, Zoom, Synopsys, Baidu, Peloton, Kava, Workday. We're at the end of earnings season, and Wednesday, Thursday, the Fed is convened, and they're talking in Jackson Hole. Most of the Fed, all the Fed members are there. A lot of other central banks are going to be there as well, and they're going to describe and define their future, probably rate cuts, and trying to avoid what happened with the Japanese bank that I told you earlier. And that brings us, as usual, to the S&P 500. And I want to start this overview on the S&P 500 on the weekly scale. This is how we look on a weekly basis. We went down from 5,600, 5,660, all the way to 5,100. We were very close to the 5,000 that Piper Sandler predicts. And then we saw two very strong weeks. How strong? You can see that this week, or let's call it last week and this week. Last week, we went up only 0%. Why? Because we dropped so strong, but we gained almost everything back. This week, we gained almost 4%. So anyone that bought the dip on Monday is probably very happy from what they did. But where are we now? We are now against a resistance around 55.50. We broke out, you can see, lower highs that we broke out from. I'll change it to the daily. What you see here, of course, is Japanese candlesticks that provide us the ability to look at the daily movement of the stock market. And I wouldn't be surprised if we might pull back a bit to around 5,400 and then maybe even thrust all the way up. The reason for that is we had 1, 2, 3, 4, 5, 6, 7 consecutive green days. Usually it kind of asks for some kind of pullback, some kind of taking back profits or actually recognizing profits. It's totally natural. Just like when we dropped, we did it in kind of a zigzag shape. We can't go up this way. We need to go up in a zigzag way. So just be aware of the fact that we might come down to around 54, maybe even 53.90. And after that, we might push up. That was a weekly summary. Glad I'm back. I'll see you next week. Till next time. Bye-bye.